Hey, good morning, everyone. It's Coach Chris from AccuTrader.net coming at you this morning at 11:43 a.m. on Monday, August 26, 2024. What you're seeing in front of you is a 1-minute chart of the MNQ September of 2024 expiration. And the purpose of this video is to teach you about a concept that I talk a lot about in my videos, and I realize now that there may be some people that aren't familiar with the concept, and that is the concept of a liquidity sweep. What is it? What does it mean to us? And that type of thing. So before I start, what I'm going to do is I'm going to go over to ChatGPT and tell you what that defines a liquidity sweep as. A liquidity sweep is a market event or trading strategy that occurs when large market participants, such as institutional traders or market makers, execute orders to sweep available liquidity at certain price levels in the market. Okay? The primary goal of a liquidity sweep is to trigger stop loss orders, take advantage of thin liquidity areas, or manipulate the market to gather liquidity from retail traders or smaller market participants. Okay, so then we're going to talk about each one of these in detail in a minute, but I just want to show you on a chart what this actually looks like. Now, I'm going to a 5-minute chart here, okay? I want to go over here if I can. And one occurred this morning that I was trading in, and I just want to give you an example. If you are a scalper, you absolutely positively need to know and be able to spot these when they happen, because what the bottom line for us as traders, what it means is we're going to have a reversal in the market. There's just that's what a liquidity sweep is. That's the purpose of it, and that's a result. So this is now the 5-minute chart, and I just want to show you what it looks like there, and then we can go back to the 1-minute chart to show you what it looks like over there. So you'll see this candle right here at 6:45 a.m. Central Daylight Time. So what was happening is we were stair-stepping our way down. We'd have a big candle down, consolidate, another one down, consolidate here, drifted up. But you can see we were just basically stair-stepping down. However, it was covering quite a bit of ground. So from here to here, that was 76 points over the course of what is a couple hours, just kind of stair-stepping down. Well, finally, we get this huge down bar, which is, let me just see here, that is 21 points down. So we get a big down bar. And then look at this candle here. Now, this one happens to be a doji or a hammer. I don't know what exactly, but a real thin body to it, but a real long wick. And let me just measure what it is from top to bottom. The same as that candle, about 21 points. But you'll notice what happens, and this is typical of what the liquidity sweep will look like. Sometimes it will be a big bar with a long tail like this, or whatever candle shape it has, it will have this long wick where it goes in and what it's referred to as they'll sweep liquidity. You'll hear that term often used. So what they're doing is they're picking up any orders that are out there sitting there. I don't know what the significance. It's 760 to 750. Somehow they knew there was a lot of orders sitting out there, and so they swept them all off. And then what will happen is the market will take a drastic turn in the opposite direction. This was a sweep to the downside. Let's see how big this candle is. Yeah, 17 and a half candles. But then the other thing you'll notice is down here, let me turn this around. You'll notice it will also be accompanied by an increase in volume. So this is the volume indicator, and this will become more evident on the 1-minute chart. You'll see here volume slowly was starting to increase, but you'll see here this bar when the liquidity sweep actually happened. You see how much more volume was conducted there. So that just shows they're going down there and all these stops are popping up, or these stranded orders are all popping up, and that's why you'll see this huge volume, and then the market will retrace. Now, you will always see an immediate retracement. We don't know the size, and we don't know for how long, because for a variety of reasons, it will depend how much liquidity is actually down there. And then if there's any remaining after this liquidity sweep, they're going to want to go down there and revisit it again. And you can see they did this, an hour later, they went back to this area. Not as dramatic, but it was basically the same thing. Big red down and then the green back up, okay? Now let's look at this on the 1 minute. And so it's basically the same thing, just you'll see it, it's at a little different pace. I'm just going to move this out of here for the time being to see this. So as we're saying, down, 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 big down, red candle, continuation, the long wick at the bottom, the sweep of liquidity, and then the reversion. And then here again, look at this volume candle in relationship to the candles around it. It practically dwarfs everything. You know, there's usually you can see here a little increase in volume around it, but then that particular candle, it will always peak. So let's just see what else it says. Okay, number 1, triggering stop loss order. A liquidity sweep often involves pushing the price beyond a key support or resistance level where stop loss orders are typically clustered. Most of these big players have software and data packages that will show them where there is orders sitting out there, and with their charting, they know that that's probably the case due to the way the market reacted in the past when it was down at those levels, okay? And so once these stop orders are triggered, it creates additional liquidity, either buy or sell orders, that can be absorbed by the larger player, okay? So that is why you see all of that volume there. And we know that it's institutions or market makers or some other large player, because retail alone would not have the ability to create this kind of volume and to move the market around like the retail or like the institutions can. Retail can't. So then that is number 2, market manipulations. In some cases, large traders might intentionally push the price in a certain direction to create a temporary imbalance. So it is true that some of the large players do manipulate the market. We knew this all along, and this is just a specific example of how they do that. And what this allows them to do is to buy or sell at a better price after the sweep is concluded, when the market returns back into balance. So what happens, you can see they're pushing it down. You get the liquidity sweep and the reversal, but you can see here quickly the market goes back into balance and starts to consolidate. You can see, look at, look at how this consolidates then for a long time. And then pretty soon over here, what do? Bring it back down, okay? Almost, to that same exact level, okay? So that's what they do. They want to get it at a better price. Then it will come back into balance, and then they'll do it again if they still see there's enough liquidity down there. Then the other thing is they're exploiting these liquidity areas. So like in this case, it was pre-market, no news day. There's really not a lot happening. It was a so-so ho-hum morning, not a lot of liquidity and volume going on. And so what this does, it allows them to throw everything out of whack, so that other participants get involved, thinking, oh, here's the liquidity we're looking for. Let's start trading. So a liquidity sweep can capitalize on this by forcing the market to move sharply in one direction only to reverse once that liquidity is absorbed. And that's what I'm saying. For if you're a scalper, you have to be aware of it, either to avoid it, because if, say you're in a short coming down here, which would be typical, big bar, hey, I'm going to ride this out. You keep riding. You don't have a trailing stop loss. All of a sudden, boom, and bam, it reverses 30, 40, 50 points. And you just went from being huge in profit to now being negative. And what do? Then you close your position, which provides even more liquidity to them. So, it's really a very, very important concept to be aware of if you're a scalper. And then, okay, this just shows an example, which I've already done on the charts. So to sum this all up, in essence, a liquidity sweep can be a method for large players to gain a better entry or exit points in the market by leveraging liquidity imbalances. It's important for traders to be aware of this phenomena, especially around key technical levels where stop orders may be concentrated. So there you have it. I hope this was helpful and explains in both graphical terms and in language terms, the examples of the liquidity sweep. I may do another video like this of another good example. It's just that this one happened this morning, and I happened to be trading in this range. And then when I spotted it, I made a note so that I could go back and illustrate to some people out here who aren't familiar with them and can't quickly see them. Hopefully, this will either make you money in your all of your trading adventures, or save you money in not being offsides on a trade you shouldn't be in. So, hey, I appreciate all my new customers and subscribers. I really do. If you wouldn't mind hitting this the like and or subscribe button below, I'm going to have a really good week if I have the time to put out some pretty cool content, not only instructional, technical analysis related, but possibly even a few more surprises. So thanks again. I'll probably have another video later in the day. The market is really acting kind of strange, acting like a typical Monday, really. Doesn't really know where it wants to go. And we're seeing some very whippy action, meaning that this up and down type of stuff with these big wicks, yet not going anywhere, and stopping you out of trades you might be in very easy, because these are 10, 15, 20 point ranges, and if you don't set a stop loss that adjusts for that, you can easily be stopped out of a position. So thanks again, everyone. Hopefully talk to you soon. Coach Chris from AccuTrader.net signing off for now.